Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade at on the back of news floor and the back of technicals. And now on the technicals, we're joined by Foram Chheda, who's the founder of Chart Analytics, and from our research team, we're joined back by Gaurav and Ansh. Hi Foram, welcome on board. The first stock that you've picked out for us is MCX. Now this one's given good moves in the last 1 month. It has started moving up. It's trading upwards of 12% in the last 1 month. From here on, do you see the positive momentum to continue?
Well, hi, good afternoon, and thank you for having me on the show. And when we're talking about MCX, we have seen almost, I would say, this year, 34% of a rally from the lows of around 4,400. And now the stock price is heading towards it's already above 6,000 levels now. Technically speaking, the stock price did see a breakout from a falling channel. In December, it had formed a high of closer to almost 7,000. Since then, we had seen a very gradual down move in this particular stock. So it was clearly in a falling channel. Now this breakout happened at around 11th of April at a level of close to 5,350 alongside a very short-term resistance breakout as well. So two pattern breakouts is indicating a good upward bullish momentum in the stock. Along with that, the stock price has also surpassed the 200-day moving average, indicating that there has been a change in trend also. And it is from down, it has started now moving up higher, along with the formations of higher tops and higher bottom. So overall, I'm bullish on the stock, and thus one can continue to hold on to the stock with a very strict stop loss below the levels of 5,400 and can look for a potential upside target of close to 6,308.
Okay, those are the levels to watch out for on MCX. Let's move on from there. And Gaurav, Interglobe Aviation is the stock that you've picked out for us. I believe it's on the back of a brokerage note. Tell us what it is.
Interglobe Aviation is in focus, and the reason being that now Kotak Equities has actually maintained its buy rating and a target price of 6,100 rupees on the stock, but they have penciled in some of the concerns that they see for the stock going ahead. Now let's not forget that Interglobe Aviation recently hit its all-time high level, and we also witnessed a time when Interglobe Aviation became one of the most valued listed player in terms of the overall aviation stock. But now Kotak is saying that potential weakness in the demand and the potential shift in some of the China-bound aircrafts can actually cause some of the pressure. What they are saying is that Indian carriers may have a diluted and a short-term impact, and specifically when we talk about Indigo, they believe that the impact is going to be short-term. They are also saying that the supply chain constraint for the sector appears to be real, and it is going to be a much longer than what they had anticipated earlier. Now, China's boost to the supply to Indian market is not going to be a significant part to play out with, and with this they see upside risk of around 2% in yield for FY27 for the stock. Now what they are also penciling in is that the crude price fall and some related benefits are going to be a key positive for the stock, but definitely on the back of this they have given a cautious call on Interglobe Aviation.
Okay, so that's the take on Interglobe Aviation. The reason the stock is in focus on the back of a brokerage note. The next stock also in focus on the back of a brokerage note, and that's Chola Investment and Finance in focus on the back of a CLSA note coming in, wherein they've downgraded the stock to a hold rating. Target price at 1,600 rupees per share. The stock is already very close to its target, and the stock is trading lower with a 5% cut coming in on the back of this downgrade coming in by CLSA. They highlight that the stock is now trading at 4 times the price to book of FY27, which is a mere 9% discount to the market leader Bajaj Finance. Now in the past, it has rarely traded at such elevated multiples, and only in scenarios where its AUM growth was anywhere between 30 and 40% this has happened. Now today the growth is in mid-20s, and they expect the 18 to 20% CAGR over the next 2 years, indicating that Chola is very highly valued compared to its AUM right now. While Chola is favorably poised to benefit from a rate cut cycle, an extra 25 bips rate cut only improves its NIM by barely 7 to 8 bips and EPS by only 2%. So even if another rate cut is on the cards by the RBI, it's not going to help Chola Investment a lot given the high valuation and multiple re-rating that it has. On the back of that, Chola is down by 5% as we speak.
Alright, moving on. Chola down and out 5% in trade. But another counter that's in focus today is Paytm. Paytm Money, a subsidiary of the company, has introduced new competitive interest rates and an updated brokerage structure for its recently launched Pay Later Margin Trading Facility, or the MTF service. Now, the initiative is designed to make investing more affordable for both retail and high-value investors. On the back of that, Paytm was trading up, good gains of almost percent and upwards, but that has now seen a decline in trade, in the second half. It is trading in the green, nonetheless trading with gains of 0.3% as of now.
Reason why Paytm is in focus. And Gaurav, coming back to you, auto stocks also on the back of a brokerage note. Tell us what it is.
Well, yes, auto stocks are in focus specifically when we talk about the likes of Hero Motors and Bajaj Autos, because now Jefferies has downgraded the rating to underperform for Hero Motors and downgraded the rating to hold for Bajaj Auto, and they have also cut the target price significantly. On the other hand, when we talk about stocks like Eicher Motors and TVS Motors, they have actually upgraded the target price from the previous target price, and the reason being that they are actually being a little cautious on the two-wheeler segment itself. What they have penciled in is that they have cut the two-wheeler industry growth estimates only for FY26 and FY27 almost by 6% point to 2% point, although they still see the healthy 10% CAGR growth is what we can see from the industry. But from here on, the competitive landscape has changed according to them, and that is the reason why they are being a little bullish on Eicher Motors and TVS as compared to Hero Motors and Bajaj Autos, because what they believe is that TVS Motors has recently got a market share which is at around 18-year high level in domestic two-wheeler segment, while on the other hand, when we talk about Hero MotoCorp, the market share has gone to 20-year low level in the domestic two-wheeler segment. So definitely a very contra call is what they are saying in Hero Motors and Bajaj Autos. When we talk about the stock performance also, on the back of the note, we are seeing some negative reaction in these two stocks, while on the other hand, we have seen Eicher Motor and TVS Motors actually up in trade. So definitely watching out on these stocks, specifically on the auto sector and two-wheeler segment, on the back of the note received from Jefferies.
Alright, that's the auto pack and focus on the back of that note from Jefferies. But coming to you, Foram Manapuram Finance on the charts. Now this one's been a clear outperformer. It has been bucking the trend for the last 6 months with gains of almost 67% in the last 6 months. When we saw that drawdown in the entire market. This one's doing well in the last 5 odd days. It has been doing well. Is it inching towards its 52-week high? What are the levels to watch out for?
Well, as you rightly made a mention that it has been actually showing a good outperformance compared to a leading index. Now, when we talk about more from a longer term perspective, or if I have to just put down a weekly chart, the stock price had formed a high 224 levels in July 2021, and post that we saw a very steep upfall. In fact, last year in July, again, the stock price made an attempt to break out the 224 levels, but it could not, and we again saw a very steep fall. However, last month we saw a good breakout with an exceptional increase in volume in this particular stock, and I've seen a good momentum coming in. Currently, the stock price has been retesting the breakout level. Along with that, it has been consolidating. But a very good exceptional increase in volume at the breakout is indicating a good bullish momentum that can be expected in the coming days or in coming months as well, because the overall trend is up. Now, when we talk about in the last 6 months also, the stock price has been forming higher tops and higher bottoms, and as compared to the leading index, we have seen a good outperformance coming in. Thus, overall, I'm bullish on the stock even from current levels. One can wait for 224 levels to get in, and somebody who has the stock can continue to hold on to it. Just maintain a very strict stop loss below the levels of 217 and can look for a potential up move closer to a level of around 260.
Okay, so that's the take on Manapuram Finance. Thanks, Foram, for that. Ansh, coming to you, HCL Tech, numbers later in the day. Tell us what we can expect.
So HCL Tech is expected to report a muted set of number for March quarter. In constant currency term, revenue is likely to decline by around 0.3% sequentially, whereas in dollar terms, it is expected to go down by around 0.7%. And the decline in revenue is could be on the back of a weak seasonality in the product business and continued softness in manufacturing. Also, if we talk about margins, then that is expected to go down by around 150 basis point from 19.5% directly to 18%. And this is partly due to wage hikes of senior employees. Also, if we talk about net profit, then that is actually expected to drop by around 6.4% to 4,298 crore. Also, if we talk about FY26 guidance, then this is expected for revenue growth to be in the range of 3 to 5%, whereas operating margin is likely to be in the range of 18 to 19%.
Right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with some more buzzers on the other side. Stay tuned.
Hi there, welcome back to Market Fatafat. Let's keep it going with some more stocks that are in focus. And Foram, you've picked out LT Foods for us on the technicals. Today the stock is doing decently well for itself, but last 6 months steep cuts of some 10 odd % coming in. YTD also the stock is not doing that well. Tell us what's the outlook on the charts.
Well, we have seen that the stock price didn't have too much of momentum in the past couple of months. And after forming a high of closer to 450, we've seen the stock price losing out, and it formed a base near 320 levels. It's consolidated on those levels of 320, and then we saw a good rebound coming in this rather last month itself. Now, from those levels of 320, we have seen the stock price also moving towards 390. That's a decent rally. And after that, since the previous week, we've seen with a gap down opening in the overall market, along with that, the stock had also come back to test those same levels of 320 of the support and is now showing signs of resumption of an up move. So currently, the stock price has been consolidating, but there has been a very good increase in volume from the past couple of trading sessions, which is indicating more of accumulation happening. And since the stock price is consolidating, along with the accumulation, is indicating that there is some built up happening overall as deliveries, and thus it's overall bullish since there is a formation of higher bottom as well. Thus, I indicate a buy at current levels along with the stop loss below the levels of around 343, and can look for a potential up move of closer to around 385 to around 390.
All right, an up move of 385 for LT Foods. But moving on, Gaurav, we picked out Indent Bank for us. Fresh set of probe coming in for Indent Bank. In focus yet again, trading with cuts of 4%. Take us through the entire news flow here.
Well, yes, Indent Bank is under pressure and again in focus, and the reason being that now, as per sources, Indent Bank has likely appointed an external auditor to conduct a fresh probe about microfinance portfolio. Now, as per sources, EY has been appointed, and what they believe is that there is a discrepancy of around 600 crore yet again, which found in the books of Indent Bank, and that is the reason why they have hired this auditor. Now, issue is likely to have occurred in Q2 and Q3 of FY25, so it is not a very long-standing issue which we have seen in terms of Indent Bank in the last case, but discrepancy has been flagged off during the statutory audit of the bank for FY25 as per the sources, and at least as of now what they are saying is that audit is to examine the root cause and establish the accountability or for lapses that they have seen. Now, it is still not clear. Indent Bank hasn't responded officially, but definitely on the back of this news flow, when we look at the stock performance, it is down almost by 4%. Let's also not forget that recently only we have seen that PwC came up with the forensic audit report, and another audit report is yet to come on the back. So definitely a very negative news flow once again for Indent Bank, and on market this we will be watching out on what happens in Indent Bank in coming days.
Okay, thanks Gaurav for taking us through that. But on that note, we'll thank everybody who joined us on the show today. Foram, thanks so much for joining us along with Ansh and Gaurav and Rajesh in the previous segment. But before we wrap it up, next up on the mutual fund, Sahi Hai presents Smart Nivesh, Sahi Nivesh.